Hello, everyone. This is Dave Allison, president of Prosperity Capital Advisors, and I wanted to take a moment to address some of the recent market volatility. Towards the end of last week, we started to see that United States markets started to experience a pretty large drawdown from their previous all time highs. Over the weekend, we started to see volatility around the world stock market, with the Japanese stock market posting its single largest day of losses that we've seen in recent history. And today, as the United States market opened, losses continued further. And so I thought I would take a moment just to bring some perspective to what's going on in the market. Now, first off, there's really a couple things driving overall markets right now. Number one is we've had a good run up for the first half of the year. If you look and zoom out a little bit, since the beginning of this year, the S&P 500 is up almost 9%, even after these recent losses that we've seen in the last few days. If we look at the Dow Jones Industrial Average, it's up about 3%. And last but not least, the more tech heavy NASDAQ index is up about 7% for the year, even after accounting for the recent losses over the last 3 or 4 days. Now, when you zoom out to that year to date number, I think it gives some pretty good perspective. I mean, if you were sitting here in January 1st at the beginning of this year, and I were to tell you that your portfolio might be up 4, 5, 6, 7%, you'd probably be okay with those numbers. But here we are looking backwards at the short term volatility, and we see that over the last 5 days, the S&P 500 has lost about 5%. The Dow Jones has lost about 4.5%, and the tech heavy NASDAQ index is down about 7.3%. Even as we zoom out over the last month or so, we're seeing some drawdowns in our portfolio, with the S&P down about 7%, the Dow down about 1.5%, and last but not least, that tech heavy sector of the NASDAQ down about 12.5%. And so, yes, over the last 30 days, we've seen a drawdown. But what's incredibly important is that we take a long-term perspective. You see, nobody likes volatility and uncertainty. Nobody likes seeing their investment account values go down, but that is a natural part of stock market investing. Now, in a diversified portfolio, you can apply principles and strategies to reduce that volatility. I shared earlier, something like the S&P 500 index is 500 of the largest stocks in the United States, much more diversified than a more speculative position. Take NVIDIA, one of the best performing stocks of the year. In the last 5 days, NVIDIA is down about 10%. In the last month, NVIDIA is down about 20%. Take another very volatile and speculative investment like Bitcoin. Bitcoin is down about 20% in the last 5 days, but both of those investments had historic increases so far over the past year. And when we think about volatility, these drawdowns are a normal part of investing, whether you're in a diversified portfolio or whether you're in something that's very concentrated and speculative like an individual stock. In fact, in a diversified portfolio like the S&P 500, again, as I mentioned earlier, 500 of the largest companies in the United States, the S&P 500 has experienced a 5% or worse drawdown in 94% of the years since 1928. Again, it's pretty much every single year we experience at least a 5% pullback. Now, when we look at 10% or worse, that's happened about 64% of the time. So even those 10% drawdowns or pullbacks are quite normal in a diversified portfolio. Even if we look at a 15% or worse drawdown, that's happened about 40% of the time. And so what we're experiencing in today's market is quite normal. It's nothing to be alarmed about if you have a good long-term diversified investment portfolio. If you feel like you're too concentrated, maybe you did make some bets in certain stocks or asset classes, now could be a good time to talk to your advisor about the potential to rebalance and just look at the outlook for the rest of the year. But as I mentioned earlier, there always seems to be a reason to sell your investments, whether it's geopolitical issues going on, whether it's politics in the United States, whether it's uncertainty about the economy and the potential for a recession. But these events have happened throughout history. And when you zoom out, you see how temporary they really are in an investment portfolio. And so, if you have any questions about the economy, the markets, or your personal investments, I highly recommend reach out to your advisor, have a conversation. We're here to help and we'll keep you informed as the situation unfolds and we learn more. Thanks a lot and have a great day.
At the time of delivery and any subsequent publishing, information was deemed reliable but is subject to change by the time of listening or viewing. The contents of this piece include options and projections of C2P, are subject to change, and are for informational purposes only. The information provided in this presentation is not intended to be individual investment, tax, or legal advice.